Wagwan, what's good and what's happening, amazing people? It's your host, Rix the Billionaire. Welcome to the Elevation Lab. Again, if you are new to this platform, feel much welcome. If you're looking to learn how to trade Forex, please be sure to begin from the first video that I made, which is if you are new to Forex, begin here. If you're not new and you're looking to gain something from this session, feel much welcome. I believe there's so much value flowing through this channel. So on our previous session, I go to speak on price action, and we said price action is definitely the queen because it gives birth to market structure. So on the same session, I go to speak about imbalances in depth, I believe, and also go to touch on liquidity, and at some point strong and weak lows, but it wasn't done in depth due to time. So on today's session, I would want to teach more on liquidity, then how to identify strong and weak lows. Then we can get to learn on candlestick momentum, what a single candlestick could potentially be telling us. So without much further ado, let's get into it. Again, if you find value at the end of this session, don't forget to share my channel with your friend. Don't forget to subscribe, help the team grow. And yes, thank you in advance. We want to look into liquidity, and I'll start by defining liquidity as stop losses. We had already defined liquidity as stop losses in the previous session, and that's exactly how I'm going to define it. So I believe we have two types of liquidity, and we have what we refer to as an external range liquidity, and we also have what we refer to as an internal range type of liquidity. So anytime that I'm speaking about a range, this is what I mean. Yeah, we said once a price makes a swing, now price definitely creates this right here. This is what we refer to as a range, where we have our swing low and our swing high. This is now the range into which price is trading within. So internal range liquidity is any type of liquidity formed within this structural range. And also external range liquidity is any type of liquidity formed outside this range. Let's get into a video. Let's get into the charts. Sorry. Let's get into the charts. Let's see if we can be able to identify that. So if you look closely, we have this area here where we have this is a range, and this right here is also a range. So on this range, this is where we have our entire range. What price tends to do most of the time, its price will always, most of the time, create a supply area. Again, I'll teach on demand and supply, probably on the next video. Price tends to create a supply area, or if it's for a buy scenario, a demand area. Then from there, a different type of liquidity, let's say mostly we have maybe price sometimes will form something of this sort. Let me use something which could be visible. Price sometimes will start forming this type of range, yeah, before clearing the liquidity, or sometime we'll get to have this type of liquidity formed here, which right here we have trend line liquidity. As you guys can see, at this particular point, a price was rejecting this trend line. So this simply means we had so many people coming into the market during this compression. This is more like the market started compressing, yeah, like it's more like a spring. Yeah? So people were putting in their orders, people were coming in. Why? Because they'd already seen, oh, the price is going down. Yeah, and this simply means, if you guys can see clearly, we have this right here was a void getting created. A void, we can call it a vacuum or a void. Yeah, this was a vacuum, or rather a liquidity void getting created by this trend line. So we have most of the people that came in, maybe people would use this trend line to have their entries, because that's what most people do. So if anybody took their entry from here, that simply means they had their stop losses right here. And again, remember, we started by defining liquidity as stop losses. So if the stop, can see what happened. The market movers pushed the market up. Of course, not aggressively. This is a point where we had like an institutional activity. We'll realize this is referred to as aggressive initiation. But again, I'm on a daily time frame. So yeah, you can see price pushed up to take away these stop losses for the market movers to place their orders. Why? Because you said they always make sure they are selling at the cheapest prices. They're selling at the highest prices and buying at the cheapest prices. Of course, we can see price never fully tapped into this supply area, which simply means in future, price will definitely push up. Take this out again. Shall come back to this. This is a weak high. I shall teach on that as we progress on. So right here, you can see we had this type of liquidity that was formed here, which is an internal range type of liquidity. Let's pick on another range. Again, the same thing happened. Anytime, let's say we have two types of liquidity: internal range and I believe external range liquidity. Then we have this, I always call them, okay, let's say we are supposed to be going up. The market will create something referred to as a buy side liquidity. And if we are to go down, the market will create a sell side liquidity. That simply means if we are to go up, the market makers will always create a reason for us to go up. If you have to go down, the market makers will always create a reason for us to go down. Why? Because again, liquidity is volume, and volume fuels the market. So anytime we're moving, the same thing happens during this pullback, because this is a pullback. This was a lower high getting created for us to push the prices even lower. The same thing, I believe, still happened where we have price pushing. I'm not so good with this trend lines, but I believe if we move to much lower time frame, we could potentially see like trend line getting respected and all that. But if you look closely right here, right here, we had the type of ranges that I was speaking about. You see, price pushed up, then we started ranging in this manner. You can see price started coming down, then pushed to probably our potential area. Then this was more like a range is happening. This was a ranging market at this particular time. Price was just ranging before we got this initiation to the upside, which I could refer to as a way to sell by the institutions. Yeah. Then again, we came back to range. So again, it's clear the market movers started forming a potential area of support right here. You can see there was a potential area of support, and this again right here was a gimmick or a way of getting more buyers to come into the market. Why? Because you can see now price would come to this level, then start rejecting. Potentially somebody could have seen, oh, this is a lower high, this is a lower low, we've pushed up, we've broken structure maybe, and now it's time to go up. So imagine what was happening right here. Any moment price would come here, and remember this is a daily chart, people would buy. Anytime price would come here, people would buy. So what was potentially getting formed here again, it's liquidity. And you can see this is where everybody who was buying was placing their stop losses. Why? Because they are buying at an area of support level. They're buying at a support level. And this is where they were placing their stop losses. And eventually, the market tapped into the zone, pulled a little bit into this area. Again, this is a very important zone. Of course, you can see we have an indecision candle here. We shall speak on that when we are talking about momentum. Then price pushed, took out the stop losses, and pulled back again to push even much lower. So again, this is liquidity getting formed. And how is liquidity formed in this area? By the most common thing, which is support. Let's keep it going. Let's look at another scenario. Again, it's always important. It's not really a must, but it's always important for you as a trader to be able to at least have a know-how of what liquidity is, just to be able to spot liquidity. Because if you honestly can't spot liquidity, chances are you end up becoming it. Yeah, so it's important for you as a financial trader to be able to spot liquidity, because if you can't do it, then like I said, you end up becoming it. Again, you guys can see we have now this is a new range that I have. This is more like a new range that I've come up with. This being our swing high, this being our swing low. So any form of liquidity created within this range, it's referred to as an internal range liquidity. Again, we'll get to learn how you can use the volume profile to identify liquidity. It's really easy using the volume profile. We get to understand areas of low volumes will always signify areas of imbalances and potential liquidity. That one I'll get to show you as time progresses on. Baby steps, pole pole. So looking closely here, you can see again the same thing happening. Price keeps on pushing down. We are seeing a scenario where price created a lot of liquidity, like right here. You can see price again pushed down. Again, the same thing is happening here. You can see these candles. When you get to touch on weak highs and weak lows, you'll even get to understand liquidity even much better on single candlesticks. Yeah, but you can see this right here, this candlesticks here. This is liquidity that was formed there, and eventually you can see price rallied and took it out. Price will probably be coming to this area of supply. This could be potentially the first area where we could potentially see some rejection in this pair. Why? Because this was clear liquidity that was formed right here. This was liquidity, and price is already taking it. And if you guys are keen enough, can also be able to say this supply area could potentially hold waters as a potential supply area. Why? Because again, price has begun creating more liquidity. Why? You can see price is creating an area of resistance. If we narrow down to much lower time frame, we'll find that these wicks are on the same level. So this definitely is a weak high. So eventually price has to run it over into this supply area maybe before we start seeing a rally to the downside. So basically this right here, this type of liquidity formed, this liquidity, this is what we refer to as an internal range liquidity. Okay, anytime again we get to speak of external range liquidity, again, I won't do much on liquidity. Please just make sure you find other sources, learn more on liquidity for you even to have much more understanding on the same. Because it's not that my trading strategy is completely based on liquidity. No. So right here again, you can see on this same range, we said we have internal range liquidity and external range liquidity. So an external range liquidity is any type of liquidity formed outside our range. Yeah. So for instance, above this range we have this supply area, which is still fresh. What do I mean by a fresh supply area? Again, this will come on demand and supply. This simply means this is a supply area that has not been mitigated. And by mitigation, I'm saying price never came to that zone again. So this is a fresh supply area which could potentially be mitigated in future. So if you look closely, we had this area here where price had created weak highs. We are going to speak on that in a few. But after price created a weak high, we saw price push higher. So price push higher to take out these weak highs. Again, on the previous session, I defined weak highs as incomplete auction. We said take a scenario where we are auctioning something, and for us to be able to sell something on an auction, we have to have the highest bidder. If we do not have a highest bidder, then we will have the presence of weak highs or even weak lows, and that simply signifies that the market has an unfinished business on that zone, and eventually in the long run price will eventually come back and complete that business. Yeah, and that's exactly what happened here. You can see price had formed these weak highs. This right here, this is a weak high. This right here is a weak high. Why do I call this a weak high? Let me zoom it in for you. If you look at this, we had this auction where the buyers and sellers were in harmony. So this simply means the buyers and sellers did not come to we never go to a point where we had the highest bidder. This was on the same level. So this simply means this right here, it's liquidity resting here on its own. Why? Because simply means we still have an unfinished business, and price eventually has to rally to that zone, and we can see price rallied all the way up. I believe this happened long time ago. Then price took it away. Okay, I was speaking on external range of liquidity. So outside this range that I was using right here, outside this range, we can still see outside the same range, we still have this vacuum, this right here. This is still a vacuum. Why? Because from this zone, from this level to this level, this is a vacuum. We still have an imbalance. Oh my goodness. My screen is stuck. Okay, right there. This level right here, it's easier for you to see it this way. This level right here, you can see this is a vacuum. This is a vacuum. So this simply means on this vacuum, on top of this zone, as much as we saw price push up to get us a higher bidder, again, simply means above this level, above this range, we still have stop losses resting here. We still have people who have their stop losses right here. So again, that simply means we have our external range liquidity over there, and eventually it doesn't have to be today, it doesn't have to be tomorrow, but eventually this fresh supply area has to be mitigated. So eventually we'll get to see price push all the way up, and as you can see, price is creating more liquidity using this trend line. I don't know if I've drawn it correctly, but using this trend line, you can still see price creating more liquidity using this trend line. I believe a trend line has to have more touches. I don't know. I really don't know how to use trend lines. But yeah, you guys are able to see what I'm passing across. So yeah, we can see there's more liquidity getting formed. So again, any type of liquidity outside our range is referred to as an external range liquidity. And you guys can see the same thing happened. After price rallied from this level to this level, we can see price came to this area where more liquidity started forming up. Why? Because price came to this level, then we would see rejection. Then this simply means we still had a lot of now people who are trying to buy from this level, and all these people who are buying from this level, they had their stop losses right underneath here. So this simply means there was formation of more liquidity, and it's even clear from this, even from this candle down below, this is liquidity. So eventually it's right here. It's right here. It's really important for us to understand how to spot liquidity. It's right here. So this simply means eventually price had to rally, of course, take out these stop losses, then kept on pushing to the downside. And you can see this liquidity that was formed here, price. Basically, that's how liquidity is formed. Liquidity is formed by the most common patterns. Let's say, like you can see, we have this. Of course, I don't say patterns don't work. They do, but they're used to form liquidity for a future date. Because you can see we have this. This is an head and shoulder. This is a head and shoulder pattern right here. So this part is the same thing keeps on happening down below. Probably we'll get to see, like, this is also like reversal pattern that happens a lot. Get to see price forming like this yellows, but eventually in the long run, this is liquid that was within this area. Guys, I'm really sorry, my network. Again, basically that's it on liquidity. Please do more research on the same. Dig deeper. It's always important to keep on looking for more information. At least I've introduced what liquidity is. Learn more on how you can identify liquidity and all that. Let me talk on weak highs and weak lows, and why it's important for you to be able to spot such strong highs and strong lows, and why it's important for you to spot such. So on the previous session, I said, even on this same session, I've said, think of it as an auction. Yeah, anytime people are auctioning things, for us to be able to sell, simply means we have to have the highest bidder. And if we don't get a higher bidder, that simply means that item is not sold. And eventually, again, remember, it doesn't have to be that particular time. Eventually, price will rally back to that area. Why? Because we have an incomplete business. So I'll use just this daily chart to show you guys this. Again, this is also a common pattern. I believe most people would call it, I don't know, maybe a twist at top, I don't know. But it's a very, very nice indication of price potentially running back to that zone. So if you can clearly see the difference between this, I would want you guys to be able to spot the difference between this and this. In the first case scenario, we have this long wick here. This is referred to as a candle wick. This week signifies a strong rejection of higher prices. Why? This simply means prices rallied all the way to this point, and when prices came to this point, there was strong rejection of higher prices. This simply means the sellers who had taken maybe their positions from this area strongly defended their prices, and this right here is referred to as a strong high. Yeah, strong high. The same thing you can see right here. We had this strong rejection. Why? Because the people who had taken their sales from this area came in to defend their prices. So we had a strong rejection. So anytime you see a strong form of rejection, that simply means now that is a strong high or a strong low for this case scenario. Anytime we get to see a scenario of this sort, where we have the bullish week and bearish week on the same level, this simply means there was harmony in this place. The auction was never completed, and eventually, in the long run, price will rally to this level and complete this business. Again, if you look closely, same thing happened here, and we saw price come back up, complete this business. Come back to this point, you can see the same thing happening, week low, eventually price coming back. Again, it doesn't have to be immediately. You can see this was after how many days? Price came back after 53 days. After 53 days, yeah, completed this business. Yeah. So anytime you get to see presence of weak lows, this simply signifies that we have incomplete business down below, and eventually in the future price could rally back and complete that auction. And this is also again a form of liquidity. So these are strong highs, these are strong lows, sorry. Areas of strong rejections form strong, what do I call them? They form strong lows and strong highs. Areas of weak rejections, you can see this is a weak rejection. Why? Because you can see price kept on bouncing back on the same level, bouncing back on the same level, bouncing back on the same level. So this simply means this is a weak high, and eventually price will have to run it over. And it's clear because you can see above it still have a fresh area of supply. So again, this is a form of liquidity. That is it on weak lows and weak highs, strong highs and strong lows. The other thing that I would really want to speak about, and now I want to narrow down to, okay, I'll start by using this same time frame, is candlestick momentum. So how do we get to, what do I mean by momentum? Momentum is simply a volume. Volume is determined, or rather it's read by the size of the candle. If you look at this candle right here, we have candles where we have candles that look a lot like this. You have candlestick that look a lot like this. Then you have candlestick that look a lot like this. Then we have candles that look a lot like this. And all these candles have a message. And what's the message in all these candles? This first candle shows us good volume in the market. Yeah. This next candle will be referred to as a doji, and this is a candle that is showing us some volume but not much volume. Then we have this candle, which is showing us volume but sometimes even no volume. And this right here is what is referred to as an indecision candle. Also, this is a form of indecision candle that could be signifying a loss of momentum. Yeah, price could potentially be losing momentum to a particular direction. So if you really want to understand momentum, it's really important for you to be able to read single candlesticks. For instance, if we look at this, we can be able to clearly see there's so much volume to the upside based on the candlestick momentum. If you look at the candles that are going to the opposite direction, you can simply see there's lack of volume. Why? Because we have long wicks and small bodies, long wicks and small bodies, and this could also help you understand the direction in which the market move as a pumping volume towards. Yeah. So again, it's really important for you to like do some intensive research on the same. Once you get to like identify your areas, let's say for instance, if you get to see price nearing your potential areas, let's say areas of supply, and then you begin in seeing price losing momentum and such stuff, that could potentially signify this area of supply could hold as a nice supply area and be of great impact for you and pay out nicely. So anytime we have small candles like this area, you can see this area where we had price pushing down but with no volume. Excuse that. Was that again? Okay, for instance, you have this area where we can see price was pushing down but with no volume. Yeah, so that simply signifies either of course low volume. It could also signify reaccumulation of orders, because institutions, when they want to like come in again, they will always consolidate the market for them to place their orders unnoticed. So again, this is low volume. This right here, it's more like consolidation, which could potentially signify reaccumulation of orders. Again, there's so much to learn in a single candle stick. So I believe that's enough for today. Just like do more research on what I've taught you guys today. Again, the other thing is more like bullish engulfing. Just go on, study some of the candlestick patterns that you may find. Look at the candlestick Bible, learn about candlestick patterns. It's very important for you to understand patterns. Bullish engulfing, bearish engulfing, dojis and all that, for you to have a clear understanding of price action. So again, that was it, guys, for today. Thank you so much for listening through. Thank you so much for watching through. If you found value, don't forget to share this channel with your friends. Don't forget to help us grow. Don't forget to leave a comment. Let me know what I can improve. Let me know if you're getting some nice value from this session. And see you on the next session. I'll be speaking on supply and demand on the next session. Thank you so much, guys. Peace out.